Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil, and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only. Doesn't take your personal situation into account. With all of that said, let's get into our first chart. So, going to start off with the S&P 500, which you can see up here on the screen, and another new all-time high on Thursday. And that follows a brief period of consolidation over the last week and a half or so. And that itself was also similar to what we saw back in January, a brief consolidation. And I think on both occasions, it looked like maybe there was the start of some sort of a larger consolidation in the makings, but on both occasions, buying interest has quickly returned and fueled another rally, as we're seeing now. And when I look at this chart, take it all in, it looks and it feels stretched to the upside. Like it has been a really big run from that October low. But this is the thing with trends. I think it's a really important thing to take on board when you're considering what to do when you're within a trend, and that is that these trends they can last longer and run further than just about anyone thinks is possible. And I think that and this is really why I avoid those strategies that involve taking profits, because it's a case of like when something isn't working, I want to cut a loss. But when something's working, it's a case of letting it work. I don't want to cap upside potential when you have the market running by coming in and trying to pick a top, trying to get out early. And look, occasionally when you try and call a top, you get it right, but more often than not, the market runs over the top of you. So I think staying with the trend remains the play here. That's been the case since we got back above those moving averages back in November. It's been a case of see where this trend goes, see how far it can take us, and I don't think that's changed. The strategy I have been talking to you about over the last few weeks, it's been staying in stocks within upward trends, but then using a wide trailing stop with the aim of seeing off moderate pullbacks and consolidations, very much like we've seen so far. These have all been quite minor pullbacks, and if you're using a reasonably wide trailing stop, you can comfortably see those pullbacks off. I think that people who see a little bit of weakness and they sell, they often look back with regret as the market continues to move up. So using those wider trailing stops can help see if that disappointment of watching the market move on without you. Having said that, look, don't get me wrong. I think the risk of a meaningful pullback is very much increasing, and every upward trend eventually does come back to its 50-day and also its 100-day moving averages. And we have a situation where the market has run for a while, and it's one of the longest runs above the 50-day moving average in some period. But it will come back and touch those moving averages at some point. So as I've said, I want to keep the upside open and manage risk with those trailing stops. I'm also not interested in buying at an index level at the moment from a risk reward perspective. I think the potential for a pullback to these moving averages is it's just getting too high. I prefer to look for opportunities from within the index rather than trying to buy it outright at this time. And I also think that the opportunities do exist from within those S&P 500, as opposed to just really focusing on those top seven, which have been really driving the charge so far. So having a look at the equal weight, for instance, it's interesting when you look at this because the equal weight has just hit a 2-year high on Thursday, and it's really now within sight of the all-time high. And the relative strength, I think, that we're now starting to see, what I like about the equal weight is that it has had a consolidation above the moving averages, and it's just starting to break higher from a compression zone. So I think that suggests there's good opportunity from within the index, which can be played out in those individual stocks rather than at index level. And I think the breakout that we're seeing is a sign of a developing broader rally in the S&P stocks. Now, if you're getting some value from this, please hit that like button, leave a short comment, just, hey, thanks for the video. Just tells YouTube you're watching and engaging, and YouTube shows other people. So it helps the channel a lot. So please do that. And also something else which was interesting, I was on a podcast earlier this week. I talk about my early start in the market, early inspiration from one of the top traders of the time, all about exit strategy. One of the biggest issues I think a lot of retail traders have in how they approach their portfolio. It's a podcast called Talking Trading. I'll leave a link for it in the description section below. It's hosted by a leading author and mentor, Louise Bedford. I think you'll find it interesting. So go and check that out if you want to learn a little bit more about what I'm all about. And now, having said that, let's just jump over and have a quick look at the small cap. So the Russell 2000, and I'm keeping a really close eye on this. This is getting interesting. The Russell is coiling up beneath its December high. So big run off the October low, hit a high in December, and since then it's been coiling up beneath it. And it's also been holding above a rising 50-day moving average. The 50-day moving average, which I think is also a positive. And what's been happening each time the Russell's come back to the 50-day moving average, we've had a strong rebound off it. That's happened on 3 occasions now. So for me, I think that's a sign that there's accumulation on these pullbacks. 3 quick rebounds each time it's come back to that 50-day. So I think from a risk reward play, I think the smaller caps are really the most interesting section of the market at the moment. Just looking at the most recent price action, the Russell got to within a whisker of its December high earlier in the week. It's since pulled back, but I think what that does, I think it gives us a clear level to watch. And if we can get a break above this week's high and then a touch above that, the December high, I think that's the type of breakout that could present a relatively low risk entry point. And so you get the breakout, you can have a stop just back within the range, and the upside potential does open up towards the all-time highs. So favorable risk reward. I think it's one of those areas of the market which is well worth keeping an eye on at the moment. So look, let's leave that there for this week. Thank you for joining me. It's been great having you with me. Hopefully you found that helpful, and I look forward to coming back and talking to you next week. Until then, bye for now.